Hi, Bioeconomy friends! Last week's headlines proved that institutional finance and crypto are on a collision course. Ethereum's founders sketched an ambitious blueprint to scale the network. A Wall Street giant filed for a crypto custody bank charter, and tokenization of gold and US treasuries showed that real-world assets are moving on-chain. Plus, Aave crossed $1 trillion in cumulative lending, and a regulator hinted that stablecoin yield rewards might survive. Let's break down the top stories from February 24th to March 2nd. The week opened with Bitcoin testing $70,000, Ethereum above $2,000, Solana testing $90, and XRP close to $1.40. Despite the crypto market's total capitalization hovering around $2.37 trillion, sentiment remained in the extreme fear zone. High spot volumes of $110 billion per 24 hours showed that traders were still active even as macro uncertainty lingered. A two-part scaling plan for Ethereum. Vitalik Buterin outlined a two-phase strategy to solve Ethereum's scaling bottleneck. In the near term, he wants to process parts of blocks in parallel and adopt an execution block proposal separation EPBS designed to boost throughput without harming decentralization. He also advocates making permanent data storage more expensive, so that everyday transactions get more block space, preventing the chain from bloating. The roadmap aims to maintain decentralization while eventually enabling thousands of transactions per second. Morgan Stanley's Crypto Trust Charter. Traditional finance took another step into crypto. Morgan Stanley applied for a national trust bank charter that would let it custody digital assets, execute trades, swaps, and staking. A clear signal that big banks want to control custody and product pipelines as institutional demand grows. Tokenized gold and treasuries prove their value. During weekends, when CME gold futures close, tokenized gold markets like Paxos Gold, PaxG, and Tether, ZLT, handle almost all price discovery. Investors rely on blockchain-based trading to gauge gold's fair value. Tokenized gold's market cap surged from $1.6 billion to $4.4 billion, a 177% increase, with 115,000 new wallets, and recorded $178 billion in volume during 2025. Meanwhile, tokenized US treasuries have grown more than $1 billion since January, lifting the market to $10.8 billion. These instruments illustrate how real-world assets are increasingly traded on-chain. Aave tops $1 trillion in lending volume. Decentralized lending protocol Aave crossed $1 trillion in cumulative lending volume, a first in DeFi history. Aave now secures over $27.2 billion in value locked and has generated $83.3 million in fees over the last 30 days, almost 4 times that of its nearest competitor. Circle's surprise earnings and stablecoin policy rumblings. Stablecoin issuer delivered a blowout quarter. Q4 2025 revenue reached $770 million, up 77% year-over-year, with net income of $133.4 million, 40 cents per share. USDC circulation jumped 72% to $75.3 billion, and the company shares rallied more than 20%. Full-year revenue climbed 64% to $2.7 billion, showing that the stablecoin business remains highly profitable even during market turbulence. In regulatory news, reports indicate that the Office of the Comptroller of the Currency, OCC, is considering frameworks that would allow stablecoin issuers to offer yield rewards without violating banking rules. The themes of this week: scaling innovations, institutional adoption, and on-chain real-world assets show that crypto keeps evolving beyond speculation. Thank you for watching, and I'll see you next week.